I'm Rob Keeney. I'm a licensed mortgage loan originator, and that means I help you buy homes and achieve wealth through real estate. What's the interest rate for a cash out refinance? For the sake of dating this video, I don't necessarily want to say what it is today because interest rates truly do change every single day, and they are starting to trend downward. So hopefully within 90 days, any number I throw out today would be way off. A cash out refinance will have a slightly higher rate than a rate and term refinance or a purchase mortgage. Rate and term refinance will have pretty much the same interest rate as if you're purchasing the home for the first time. But a cash out is going to be half to 1% higher. It's just considered a higher risk loan. It's just kind of a general rule that interest rate is an indicator of the risk assessment of the loan. So if the loan is low risk, somebody's got super high credit score, they're putting down a large chunk of money, or they have a lot of equity in that home, they're going to get a better rate than somebody that's maxed out on a debt to income ratio and minimum equity and lower credit score. That's a higher risk loan, so it's going to have a higher interest rate. That's the truth. Really, if you're buying a car or credit cards, I think, if you better your credit, your payment history, the better you've established yourself as a borrower, the better terms you'll get. It's important to keep your credit scores up. Because over the course of your life, on a mortgage, that can add up to tens of thousands, if not hundreds of thousands of dollars over the course of your life. By the time you look at, higher interest rates on a mortgage, higher interest rates on an auto, on credit cards, that stuff adds up. When you look at that over a lifetime, that's a lot. Interest rates for a cash out refinance, again, that's just considered a little bit more risky of a loan. And so it's a little bit higher. I would say half to 1% higher than whatever the normal rate is on a 30-year fixed purchase or cash out refinance. What are the fees and closing costs associated with a cash out refinance? With any new mortgage, there's a lot of third parties involved. There's going to be a title company. There's going to be an appraiser. Generally speaking, especially on a cash out refinance, we have to have an appraisal done to verify the value of that home. Title company is going to issue a new title policy. Now, if you bought the home less than 6 years ago, you will get some type of prorated discount, at least in the state of Texas. So it's not like you're going to pay for a whole kit and caboodle, brand new big title policy. It'd be heavily discounted. The newer your current title policy is, then more of a discount you get. So these folks that are buying at, right now, let's just call it 6.75, 7%, 6 to 12 months, when rates are down to 5 and it can save them hundreds and hundreds of dollars every month, they won't pay for an entirely new title policy 6 to 12 months from now. They're buying the home now. 12 months from now, they're going to get a very substantial discount on that title policy. But all that said, other closing costs, typically your lender's going to have some lender fees, some origination charges, application fees, credit score fees. There's lawyers involved. There's a lot of third-party fees that will add up. So there are closing costs. I would say with any refinance, you're probably looking at around, I hate to average, but it's around $3,000 to $5,000, just depending on the size of the loan, how old your current title policy is. When I help somebody analyze the potential or the value of doing a refinance, whether it's a cash out or a rate and term refinance, what I do is I help them understand the costs, those closing costs, and really kind of what's their break-even point. And by break-even, let's just say, and we use some simple numbers here, and let's just say the closing costs are $3,000. But we do the math, and by lowering the interest rate, we can save that person $300 a month. It's only going to take them 10 months to recoup that entire $3,000 of closing costs. That's a no-brainer. And I think that's the situation we're going to have for a lot of folks in 6 to 12 months. And honestly, I think anything under 4 or 5 years on that break-even point is good. Under 4 years, I'd say definitely. 4 to 5, let's look at it. Over 5 years, I started to question it just because of the fact that the average mortgage life is 5 years. So even though everybody's taking a 30-year mortgage, some people take 15s. But when you look at across the board, the average mortgage is paid off or refinanced within 5 years. I wouldn't recommend, if your break even is not going to be for 8 years, I wouldn't recommend doing it just because there's a very good chance you're not going to have that mortgage for 8 years. You'll either refinance for some other reason or you will sell the home and move into a different home. That's usually what happens. Buy a home and they live in it for 4 or 5 years and they move on to another home. So in that case, it wouldn't make sense to spend a lot of closing costs that's going to take 8 years just to break even when you're only going to have the mortgage for 5 years. Just don't do it. That's part of the analysis I do when somebody's asking me if they should do a refinance. It comes down to your needs and your situation. It says, how does a cash out refinance affect my monthly mortgage payments? Trying to think if there's an exception, but I'm going to generally say they're going to increase your monthly mortgage payment. because one, you're borrowing more money than you currently owe, and at least in today's environment, it is a higher interest rate. 2 years ago when rates were really low, sure, I had people doing cash out refinances, even though they're a higher interest rate than the other type, they were lower than what the person had at the time. The person at the time had a 4.5 and they refinanced back then at, 3.25 on a cash out. So they saved money every month and got cash out. Those are the best of days, and, if those ever come back, we'll all be happy, but not counting on it. A lot of that was driven by COVID and what the government was trying to do to hold up our economy, given that housing is such a major, major driver of our economy. And there's a lot of things the government did to get interest rates as low as they were. Hopefully we won't have another COVID, so I don't know that we'll ever get down that low again. So normally speaking, especially in today's situation, rates are a little bit higher, so your payment's going to go up because you're going from a lower rate to a higher rate, and you're going from a smaller loan amount to a higher loan amount. You took cash out. The main principle I was really trying to get across in my video was total monthly expenses. If you look at just the mortgage payment goes up, oh my gosh, that sounds like it's not smart. But if you use that cash to pay off a lot of other credit cards and student loans, autos, whatever you want to do, you may end up spending less every month. Go back to the example of my customer that closed today, literally today. We paid off 23 credit cards, $100,000 in debt. Her new mortgage payment, it's substantially higher than her previous mortgage payment. But when you look at her monthly expenses, now all she's got is that mortgage payment. Whereas before she had a smaller mortgage payment, but she had so much other debt. I mean, her total monthly expenses were up here. So now she's gone. She's got this mortgage payment left. She is saving $1,200 every single month. So it's not just necessarily the question, how will it affect my monthly mortgage payment? Generally speaking, the monthly mortgage payment will go up when you do a cash out refinance, but total monthly expenses can go down substantially and make it all worthwhile. What are the potential tax implications of a cash out refinance? And I love that question. Mortgage interest is deductible on your tax return. The more you pay in interest, the more you can deduct. The tax implications are good. You don't pay any tax on taking that cash out. It's your money, your equity. You bought the home, you earned it. You paid tax on your income when you earned your income. Then you bought the home with what was left. There's no tax on taking the cash out. Again, if you're paying more interest, then you're going to have a bigger tax deduction. So it's actually very helpful from a tax standpoint. So it does offset some of that impact of the mortgage payment going up or, because of the higher interest rate. So you could benefit in multiple ways in that the total monthly expenses go down, and then you also get a bigger tax break at the end of the year. That's in addition to the other benefits of streamlining and simplifying the monthly bills, monthly finances, getting everything all down into one manageable payment, and also just paying off those credit cards and how that's going to boost your credit score, which will then, just put you in a better position in the future. Anytime you need to obtain credit, you'll get better interest rates then. A lot of potential advantages of doing a cash out refinance, but taxes is usually a good situation. How long does a cash out refinance process typically take? A lot of lenders say they're about a 30-day close on their mortgages. Some still say 45. I generally close all my loans within 3 weeks, 21 days. If I need to hurry and go faster, so I'd say 3 weeks at the max, as long as the borrower is, responsive and providing the documents we need when we ask for them and not dragging their feet getting them to us. We can underwrite a loan and process it, and everything goes pretty quickly. Now, again, Texas has a little bit different laws. If it's your primary residence, and that's what we've been kind of talking about this whole time, your primary residence being your homestead, the house you live in full time, or at least more than 50% of the time. When it's your primary residence, Texas has a 12-day rule, meaning as soon as you complete the application, I have 3 days to get you a 12-day letter that basically is the state of Texas telling you all of the moving parts of a cash out refinance. By law, cannot close for 12 days after you sign that letter. You do them all usually within 21 days. I'll never be able to do one faster than 12 or 13 days. Just because of the Texas laws. Now, outside of Texas, don't have those other states, probably do those faster. Kind of answer the question. I think, the industry will say probably an average of 30 days. Like I said, I can close most of my loans in under 21. Another benefit of a refinance and being able to close it quickly. Another benefit for folks, especially if they're just cash strapped and need some financial relief. Depending on the timing of the refinance, they could theoretically skip 2 mortgage payments. And by that I mean beginning of the month, 3rd, 4th, 5th day of the month, if they have not made their payment yet for that month, because mortgage payments are due the 1st of the month. If they haven't made it yet, It's really up to them if they do, because they would incur a late fee. However, nothing gets reported on your credit report unless it's late for 30 or more days. If it's the 5th of the month and we can close it in 21 days, we're going to close you on the 26th, your mortgage will be paid off before it hits 30 days late. Generally on the 15th or 16th of the month, you're going to get a late fee. Call it $80, but some folks are okay with taking that $80 fee as long as it doesn't hit their credit. Because the nice thing is they get to skip this month's mortgage payment, and anytime you take out a new mortgage, you get to skip the next month. Whether they pay this month or not, they will skip next month. If they skip this month too, then they're getting to skip 2 months. So that's 2 monthly payments. That, some folks who are paying $3,000 a month, that's an extra $6,000 in their pocket right there, in addition to the cash out. Or even on a rate and term refinance, if they're just doing that, not taking any cash out, they can still save that $6,000 and put that in their pocket. Those are some great questions. I hope this has been helpful. I really do love what I do. Everybody's situation is different. I love to help people, and I love to analyze things and see what's best for them. If you have any other questions, keep them coming. Don't hesitate to ask. Call me, text me, email me, whatever you prefer. I'm here to help. Thank you.